Welcome to the Commercial Know-How podcast, where mortgage brokers learn how to successfully launch, manage and grow a commercial finance business. I'm your host, Belinda Gibson. Join me as I draw on more than 25 years of property finance expertise to show you how to diversify beyond residential and build a growing business for all seasons. Don't forget to hit subscribe and visit commercialknowhow.com.au to download my free ebook to help you get started in commercial finance. Now, sit back and enjoy the episode. Hi, and welcome back to Commercial Know-How. Today, we're going to be discussing 5 things that you need to know about commercial self-managed super fund lending. So, SMSF lending allows your client to invest in commercial or residential properties. We are going to focus purely on the commercial side of this. The SMSF fund itself is governed by some rules under what we call the SIS Act or SIST Act. So first of all, we want to make sure that your client's fund is compliant. So you can check if they are compliant or not by visiting the website superfundlookup.gov.au. It is very similar to the ABN lookup page. Now, if your client has a new fund, we want to make sure that it's actually ready. So this includes having a bare trust established, a formation balance sheet from their accountant, and their industry funds have been rolled into a self-managed super fund bank account. Now, if it is an established fund, you will need to collect things like historical income tax returns, financial statements, and understand what assets are already in the self-managed super fund, including bank accounts. You'll also need to get a copy of the trust deed relating to the SMS fund. Now, separate to that, your client will be establishing a secondary trust called a bare trust. Some people also call it a custodial trust. Now, the bare trust becomes the borrowing entity, and it will be the purchaser on any contract of sale. Now, the bare trust is another trust deed that you're going to have to hold and obtain. And this entity will be buying the property in the self-managed super fund. Once the debt has been repaid, the property transfers from the bare trust back into the self-managed super fund. Number 3 is around goods and services tax. So consider the implications of GST on commercial SMSF purchases. You'll need to determine if the property purchase price is inclusive or exclusive of GST, and whether the fund is also going to register for GST. So if GST does apply, you will need to add this into your funding calculator. The client will generally get a refund once they lodge their BAS statement for that quarter relating back to the purchase. Your client's accountant will guide them here and give them some specific rules around what they really need to do. We just want you to be aware of it on the contract of sale itself. Now, number 4 is rental income. So most SMSF investors would be looking for some sort of rental income. You need to understand how the rental income from the lease will flow into your client's SMSF. So review the lease terms, the rental rate and tenant quality to ensure the property will provide a steady income stream for your SMSF applicant. Now, quite often you may have mum and dad who are running a business and they're wanting to buy the commercial property and become their own landlord. This is perfectly fine. It is actually quite common. And so here, when you're looking at your capacity to repay, a self-managed super fund is really quite simple. We are really just looking at the rental income flowing into the fund from the lease. your member or your applicant's contributions into the fund. So this might just be their superannuation guarantee contribution. Currently, that's at 11%, but it is increasing in future years. So work out what that is. Find out if they're making any additional contributions into their super fund. We can use that as income for the servicing test. Now, if they have other assets in their fund that are generating interest or dividend income, you can use this for servicing purposes, and that's where those historical financials will come into play. Now, number 5 is the lender's requirements. Now, as a finance broker, we want you to have a deep understanding of the lending policy associated with commercial SMSF loans. Now, essentially, these loans are very cookie cutter because they are driven by legislation that sits behind these loans from the SIS Act, and they need to be compliant. So the things that will change is only really going to be around lender policy. So, this is where rates, loan terms, and fees are going to come into play. Now, some lenders do have some requirements around liquidity and some ratios. So one, for example, might want you to have a certain amount of cash left in the fund after the purchase. Others really don't worry about that. So when you are making a recommendation to your client around which lender to proceed with, make sure that you are going to meet their policy requirements here. Don't focus too much around rate and fees. We want to make sure that they actually fit within policy. To conclude, I think you'll find that commercial SMSF lending offers a real valuable opportunity for you to diversify into superannuation lending. It can be a bit daunting at first, but once you have an understanding around the bare trust and what the lending guidelines are, it's a great opportunity for you to offer your existing self-employed clients an opportunity to perhaps buy their commercial premises, etc. So by understanding the background requirements and the needs of your own clients, you can confidently guide your clients towards lenders that will align with their SMSF and investment goals. Reach out to your BDMs in this space and just let them know you want to understand the policy a little bit more and also some time frames. So some lenders can take a really long time to do these assessments. When I'm talking to my own clients around self-managed super fund lending, I want really long time frames. So I have in the past asked for 30 days on finance clauses, and a minimum of 60 to 90 days for the settlement timeframe because they do take a long time. Although the servicing side of it is really simple and easy, the amount of documentation required around vetting and understanding trust deeds and the structure can be quite complex. Some lenders will also want to understand that if it is a sort of mum and dad investor and they're going to be owner occupied and renting their self-managed super fund commercial property back themselves, they want to understand that their business is actually viable, that they do have the means and opportunity to make additional superannuation contributions into their fund if something goes wrong as well. So don't be intimidated if they are asking for additional information around the business. This is quite normal. So I hope that this podcast has provided you with additional information around the self-managed super fund lending and guidelines. It is just a general guide, and we do recommend that you remain up to date with lending policies of the various lenders offering these types of opportunities to you. Feel free to download the brochure available at the end of the show in the show notes, and also go to commercialknowhow.com.au for more information. Bye for now. Thanks for listening to the Commercial Know-How podcast. Don't forget to visit commercialknowhow.com.au where you can get in touch with me or download my free ebook to help you get started in the commercial lending space. If you enjoy the show, please hit subscribe so you don't miss an episode. See you soon.